Hello and welcome to another edition of Client for Life on this shocking Melbourne day today. Hopefully by the time you're watching this we've got the good weather back. Well, the market continues at a lovely, consistent, steady rate. I am never happier than when I feel I know what I can expect from the market, and I certainly feel that we're in that zone at the moment. Clearance rate was 70% again last week. Sales before auctions are considered strong, and negotiations shortly afterwards continue to be very consistent with a nice market. Return on investments is on the improve quite dramatically, with rents going up. In fact, I was looking today that a medium unit price for a two-bedroom apartment is $535,000, but the medium rent is $550,000. Now, for those of you in my program, we know to knock off the zeros and make the comparison. So rents are actually performing the strongest that they have performed since about 2008. One-bedroom apartments, the median price is quite low at $313,000. Obviously that's old, new and everything in the mix, but the return on investment is really, really high at $380 median rent for a one-bedroom apartment. So once again, if you're investing in a one or two-bedroom apartment, you're on the higher end. You're certainly in the 5% return there, which is fantastic. So we're still seeing a really great return, with developers being really sensible about price lists. I've seen the heat come out of that, which is brilliant for us, because we like to, we go where we know, and when things are, when we feel confident, obviously that's a good time to be investing. And with money so cheap, still rental returns the highest I've seen since 2008, and really realistic prices in the market. I honestly think it's the best time now to be buying. In terms of the overall government and where we sit with negative gearing, it's just like the sound of one hand clapping now. It's really over and done with, done and dusted. The government, as we see, is ricocheting around with some couple of other options that they're looking at, but nothing really clear at this stage. The US, interestingly enough, have come out saying that they've decided not to put interest rates up. They're really enjoying a nice levelling out of their economy, and I think they want to keep the status at that level. On the domestic home shore here, bank interest rates are low, unemployment is going down, and all of the industry consumer index pricing growth rates are higher than were expected. So, and that sees in the Aussie dollar, it's reflected at 0.75 cents in the dollar. Tell you what, I felt it. I've just come back from Hawaii, and every time you paid for something, you knew you had a 25% loading on it, but that's how it is. It's a lovely place to go for a holiday too. So in terms of the market, I feel it's in a nice, calm place to be. It's still difficult for first home buyers. It's still difficult if you want to upgrade your own home at the moment. We know 43% of the market is people changing their homes, and a lot of people are still under the stress and strain of standing at auctions, and at 70% clearance rate, it's still a very competitive market. But anyway, I'll sign off on that. Thanks for listening. I've got a few other announcements that I'll attach to this particular newsletter. One in particular, I'm having a cocktail party in 3 weeks' time, and I'd love you to come along. So stay tuned and look below for the link. Thanks so much for listening. Bye-bye.